Awesome. Well, we're excited to get started today, and it's an honor to welcome back to the Hilltop John Connolly, Managing Director at Spectrum Equity, a leading growth equity firm in San Francisco, Boston, and London. The fund is currently investing out of its 10th flagship fund, a multi-billion pool of capital. Since joining Spectrum in 2009, John has played a pivotal role in shaping the firm's software and internet investment strategies. John focuses mostly on investments in consumer internet, SMB software, and education technology businesses. His track record includes some of the most recognizable names in the digital economy, having led or supported key investments in Grubhub, GoodRx, Ancestry, Headspace, Kajabi, Teacher Pay Teacher, and Otter AI. His ability to identify category-defining businesses has earned him consistent industry recognition, including being named to GrowthCap's top 40 under 40 growth investors multiple times. John is a proud Georgetown alum, and when on the Hilltop, he was a member of the track and cross country teams. He continues to stay involved at Georgetown as a member of the board of advisors of Athletes Invest, which I know some members are currently present, so that's awesome. And outside of Georgetown, his philanthropic efforts include being a board director for the Vooks Literacy Foundation, a nonprofit focused on improving literacy amongst children. So I'd like to get started. I know we have a lot of students in the room. You're back at Georgetown. It'd be awesome to kind of hear if there's a specific Georgetown memory that kind of rings a bell as you stepped back on campus and made you feel a bit nostalgic.
Well, first of all, thanks for having me.
Of course, thanks for coming.
Do you think you could be my hype person at our partner meetings?
I got you.
That'd be great. And the title of this makes it sound like my career might be over, which I hope it's not. But
I don't think it is.
Okay,
you got time.
Honestly, I was walking around M Street in Wisconsin, and I was a little sad. All the bars are gone. So I don't know
Tragic.
you guys go out anymore. I was at Martin's last night, and I'm happy to say that was going off.
Classic.
So it was fun. But I actually called my folks when I was walking around last night, and I said, thank you for giving me the experience to go here. There's just something magical about walking through those gates and seeing the buildings and seeing the students. And I'd like to think I fit in and think I'm a student, but it's clearly, I actually sat in Levy. I was like, I'm going to do work here for a little while. And then I very quickly fell out of place and went back to my hotel. But it's a special, special place. And, honestly, the relationships that I forged here are the most endearing. We have a group text with all my Georgetown buddies. One of them had a baby last night. And I don't know, just the connectivity I have with some of the best friends of my life was a fantastic time here on the Hilltop.
That's awesome. And I think kind of looking to your life right after the Hilltop, you went to Credit Suisse, investment banking, media and telecoms. What made you make that decision?
Honestly, it was 2006. Some of you guys probably weren't born then. But that was the job to get. Wall Street was booming. Everything was over-levered. CMBS was a thing. And it was the go-go days of Wall Street. And I grew up in Oregon. My dad grew up on a sheep and cattle ranch. I didn't know the first thing about finance or Wall Street. But being here at Georgetown, you get real exposure and access to wow, there's this career that you can have up in New York City. And all my friends were applying and all the banks were coming to campus. And I said, why not throw my hat in the ring? And I was so stupid that I thought to myself, well, I've seen the stock market on TV, so I'll go do the stock market. And I got a job at Credit Suisse. I started in equity sales and trading.
Yep.
That quickly ended, which we can come back to, but that's what got me onto Wall Street in the first place, was just Georgetown and its connectivity to Wall Street, which was great.
Awesome. And then kind of after Wall Street, you pivoted to growth equity at Spectrum in 2009, and I guess it'd be great to hear what led you to make that decision and kind of where that fire and spark came to get into that investment world.
Yeah. Well, so I started in sales and trading. I was 3 months into the job, and I'll never forget this, and I apologize for my colorful language, but I sat down for lunch with my mentor, and he said, John, get the out of here. And I was like, what are you talking about? And it was a real transformative time on Wall Street. Algorithmic trading was coming to the fore. I remember being on the trading desk, and guys used to bet. They'd say, we'll send half the order flow to the human and half the flow to the algo. Can you guys guess who won in that trade? The algo won every time. And so it was just ripe for disruption. Hedge funds were really being institutionalized at the time. Like the whole asset class, the value of Wall Street research was diminishing. There was just a bunch of things going on. And so he gave me the sage advice to out of there. And I reached out to a Georgetown alum, went out to lunch with him. He was running the media and telecom group at Credit Suisse at the time. And halfway through the lunch, he said, "What do you want?" I said, "I want a job." And he said, "Can you start next week?" And so I switched into investment banking and did kind of corporate finance at Credit Suisse. Then the world imploded in 2008, 2009. And I wanted to get onto the buy side. And I was really attracted to growth equity and kind of where it sits in the landscape. I'm also a West Coast guy. I was born and raised in Oregon, so the draw to the West Coast and getting out of weather like this was pretty appealing. So I found my way back to San Francisco, and that was 16 years ago, and I'm still with Spectrum today.
That's awesome. And I think kind of looking back at your time in sales and trading and investment banking, how do you see kind of skills that you learned then transfer into your work in growth equity now?
Investment banking was pivotal for me. I was in the college at Georgetown, so I knew a little bit about Shakespeare. I knew a little bit about a lot of liberal arts stuff. I knew nothing about corporate finance. And investment banking is great. It kicks your butt, and you're in the office ungodly amounts of hours, but you do through repetition over and over and over, learning the fundamentals of corporate finance. And so that was where I kind of got my MBA. And that's been very important for me throughout my career, all the stuff I learned there.
Yeah, that's awesome. And I think that's helpful for everyone in the room to kind of hear how you can have a background in other things and still end up in a place like growth equity or venture capital. So it's important to keep in mind. Why software and internet?
So I'm dating myself, but you got to remember 2009, like it was all happening. Facebook was going public. I switched from a BlackBerry to an iPhone. We all know what happened with iPhones. So it was just an incredible time to be riding these waves that were going on, the transition to the cloud, mobile devices, SaaS was really coming to the fore. And I was just fascinated by it. And it kind of led me to a lot of my consumer stuff that I do, where I saw these transformative technologies impacting people's daily lives. So Grubhub, the ability to get a burger to your door in 10 minutes. I was like, that's incredible. Or Headspace, like bringing meditation to the masses. Like I thought that was pretty fascinating. And Ancestry.com, the ability for me to go back in my family history and find records of my great-grandparents when they came over from Ireland and all that stuff. And so seeing that firsthand, I was just wanted to be involved with those types of companies. I also liked, and I don't know if the people in the audience know the difference between venture and growth, but we tend to take a little bit later stage bets. So we're not taking the seed or Series A bets. Like there's a lot of stuff working there. And that just fit with my risk tolerance. Like I don't know, I'm not gambling on sports on the weekend. I'm not going to Vegas and playing a lot of blackjack. Like I like taking calculated risk, and growth equity and where we fit in the risk reward continuum just worked perfectly for me. And so that's how I ended up in software and internet and growth stage investing.
That's awesome. And I think specifically with growth equity, as you mentioned, it's a little later, bigger check sizes. How do you kind of think about your portfolio companies? I know you're a bit more involved, I'm assuming, than obviously in venture capital when that's earlier. So kind of how do you think about all of that? And maybe if you have an example of a portco that you've really had to dig in and work on, or maybe there's a couple that you really were hands off and the founders took it from there.
Yeah, we get all shapes and sizes. We work a lot with bootstrap companies, so they've gotten the company to a certain scale, but need help taking it to the next level. So there's a lot of recruiting that goes on. We're bringing executives into the company that have seen the next stage of growth. There's a lot of systems upgrades that need to happen. It's not uncommon in diligence. And I remember I sat down with the founder of Teachers Pay Teachers, and I'd ask him a question, and he'd go, I don't know. And he didn't have some like basic understanding of what was going on with his, cohort data and his user file and customer engagement and all the stuff that help you kind of unlock and compound growth at scale. We'll come in and analyze that stuff, point to things we think need more help and attention and so on and so forth. And then the other thing we do is help a lot with M&A. So doing acquisitions that can set the company up for success. So I merged Grubhub and Seamless together. If you were in New York or back in the day, you might remember the Seamless brand. But we put those two businesses together and then shortly after took it public. And so transformative acquisitions like that are a big part of what we do as well.
That's awesome. And kind of digging into the due diligence, when you think about something like a company like Ancestry and Grubhub, they kind of seem very different, but obviously you've invested in a ton of successful companies. So there's obviously a common thread throughout diligence that you're able to really nail on the head. So I'm curious if when you're going through that process, are you looking, what's most important to you? Is it the founder? Is it the revenue growth? Is it retention? Really, what do you like to dig in personally as an investor?
It's really all the above.
Yeah.
The founder's super important. If revenue's not growing, that makes it hard. So you want to see revenue growth. You want to see margin scaling, all that kind of stuff. But what we're really looking for with any investment is what makes this business special and what's going to make it defensible over the long term. So it could be various things for different companies. With Ancestry.com, they had a big partnership with the Church of Latter-day Saints and all the records that that organization had digitized. And so we had exclusive access to that record. So that created a moat around the business where if you wanted to go find out about your great-grandparents in Ireland, we were the only ones that had the records of, them checking in at Ellis Island or whatever it might be. With something like Grubhub, there was network effects where the more restaurants that were on the platform drove more consumers. The more consumers that were on the platform drove more restaurants. And when you get that flywheel going, it's very, very hard to disrupt. At Teachers Pay Teachers, this was a marketplace of teachers where they bought and sold curriculum from each other. So a kindergarten teacher would come up with some great way to teach the ABCs and put it on Teachers Pay Teachers, and another kindergarten teacher could come buy it. But this created like a network of entrepreneurs that would then go market the business for us. So they'd try to market their page, which drove new users to our platform, which enriched other teachers, which made them want to go market their pages and so on and so forth. So those are some of the things that happen. And sometimes it's more nebulous. Like I remember when we did our investment in Headspace, candidly, there's not a whole lot of IP there other than a very nice sounding British man helping you kind of relax. And so we got really comfortable with the brand they built. Like Andy Puddicombe, the founder of that business, was a force of nature and had been on Oprah and had been to the White House. And all that work created a brand halo around the business that was super hard to disrupt. So that's something more nebulous than network effects, but what we underwrote on something like Headspace. So it varies with each investment.
Makes a lot of sense. And I guess kind of going off of that, thinking about some top 3 characteristics of yourself that you think make you a great investor.
Oh God. I'm not sure I'm a great investor, but intellectual curiosity. Like this job is one where there's always a new thing to explore. And so having the intellectual curiosity to want to follow that rabbit hole and see what you find is super important. The other thing that I think is important at the beginning of your career, middle of your career, and the end of your career is just hard work and grit. This job kind of doesn't stop, and the work of helping our entrepreneurs, and it's, I think, even more acute right now in the age of AI with how fast things are moving, you got to work your tail off. And so that's super, super important. And the last thing I'd say, I do think you need, not all investors have this, but I think having humility is important to be able to like call balls and strikes and say, okay, I got this wrong or I got this right. There are some investors that I actually think have zero of that and are great investors. They just like move heaven and earth to like make things happen. But for me, I particularly at the stage we invest, like that ability to just be brutally honest with the truth, even when it might offend some of your preconceived notions, I think is really important.
Makes a lot of sense. And looking kind of for Hoyas maybe in the room, what's something on a resume that might seem to, or people think is irrelevant, but you actually think is something that's super important?
Yeah, I mean, the resumes we get now are just perfect. Like they're working in venture capital at like the age of 10, and I'm like, how is this possible? So what I look for and what I really like is some, and I'll go back to a prior point I made, is just some demonstration of grit.
Yeah.
Where you've shown something or done something that shows you're going above and beyond, and you're not just kind of ticking the box on the resume, because honestly, like it feels like they all have that where they've worked for whatever venture capital firm. So I like seeing like jobs during school, like if you're hustling and working at, is Vital Vitals still around?
Still there.
If you're doing that, or you're doing the credit union, or I don't know, you're doing a retail job, or being a waiter or waitress, like I like love that. I know that's not sexy on the resume, but like showing that you got grit and like are having to kind of work for your time here on the hilltop, that really, really matters to me. So I look for that a lot. And then again, that could be extracurriculars too. It could be you're an athlete or you're, I don't know. I talked to somebody the other day who was doing something around debate, like stuff like that can demonstrate that grit as well.
For sure. And
But it's hard. Like you guys are all doing so well. It's like incredible. I would have never gotten a job today.
I'm sure you would have. Bring it back to the Hilltop a little bit. Is there any professor or class that kind of stuck with you longer than you would have expected after kind of leaving DC?
It's been 20 years, so I can't remember everyone's names. There were a number of great professors and classes that I thought were fantastic. And honestly, it was the diversity, and I alluded to this earlier, like being able to learn about North Korean nuclear policy and then, ethics in the Supreme Court. None of that is like directly applicable to my job today, but having studied that and given my mind a chance to do that, I'll never get the chance to do that again in my life. Yeah. So I take advantage of that now. And then B, I just think that like multidisciplinary thinking is really valuable as an investor. So it's, I just gave you like a super political answer if I didn't answer the question, but it was a bunch of different things. And then again, the people here and the classmates I had, I just have such a great network of Georgetown people that you guys are all lucky to get to go to school with every day, the people that are at Georgetown.
We are lucky. And I think we're lucky in the sense that Georgetown kind of teaches all of us to be lifelong learners. I'm curious, how are you able to, even outside of your job, continue to learn, and whether that be a book or a podcast or kind of how you go about keeping yourself educated?
I'm learning how to be a dad, so that's taking the most of my time with a 5 and 6 year old.
Probably the hardest.
Yeah, that's the hardest. Podcasts are great, and they're a relatively new phenomenon. And I've got a 40-minute commute to work and home from work in San Francisco, and I've got podcasts that I listen to and enjoy. And I was listening to one like Acquired. Have you guys done that? And they do great. They're really long episodes, but they do great teardowns of even like non-tech companies. So I'm not a watch guy, but I heard one on Rolex the other day, and now I want to go buy a Rolex. I was like, this company's awesome. And so podcasts are a big part of it. And then I do try to read. That tends to only happen on vacation. And then when I say read like a book.
Yeah.
And then, daily I have, I don't know, probably 5 or 6 newsletters that hit my inbox every morning that I stay up on and read. And that's mostly kind of happening in tech news, deal announcements, so I'm kind of know what's going on and what's getting funded. Those are primarily what that stuff's about.
And kind of on the literacy lens, I'm curious, you went to, I believe, a Jesuit high school, went to Georgetown, which is also Jesuit, so...
Catholic grade school too.
There you go, all the way
time.
through.
Yeah.
And I think that shows definitely in your work with Vooks Literacy Foundation. So I'd love to hear a little bit more about that and kind of the philanthropic work that you do with them.
Yeah, so Vooks is a digital literacy platform that's trying to get access to books, primarily in what they call like book deserts. It's areas of the country where there's just not the kind of access that probably a lot of us had to reading materials growing up. So we're shipping iPads all over the country and giving kids access to these materials where they can interact with the content, and then the content actually interacts with them as well if you don't have parents that are able to spend as much time. But it's a small thing, but something I enjoy doing and trying to help out a little bit.
That's
so
awesome.
If any of you want to donate, come grab me afterwards and we'll take your money.
We'll be sure to let everyone know. Kind of circling back to the students, what advice would you kind of want to leave with all of the students as whether they want to go into venture, growth equity, life advice, kind of the John Connolly advice?
Enjoy your time here. Like one of the, and these are kind of conflicting things, but I'll say it anyways.
That's okay.
One of the sad things I find about recruiting and where we are in the world with how competitive these jobs are is it starts so early. Like I think we're interviewing sophomores now for internships. We've got Hunter and Max here both joining us. We start talking to you guys way too early, but we're still excited to have you. But it's just kind of sad to me that it starts as early as it does. And for better or worse, you got to participate in that process. But just try to enjoy your time here. Like, enjoy your classes, have fun with your friends, like drink up the Georgetown experience because it's 4 years of your life that are going to be over like that. And unless you go to business school and party for 2 years, like you're never going to get it back. So try to enjoy it despite all the pressures.
That's awesome. And kind of looking at, I know recruiting has changed, as you mentioned, and now you can go straight into growth equity, VC at some firms. Others, they want you to go into IB. I guess kind of what advice do you have? I know you hear a lot of different things as different recruiters come to campus. So what's your thoughts on that?
There's no right answer. It might have been Jack Welch who said, like, if you want a certain job, just go work at that job. So, like, that's probably my, like, guiding principle. Like, if you want to go work in growth equity, like, go try to work in growth equity.
Yeah.
But if you can't get that job or, like, the stars don't align for whatever reason, going and doing consulting, investment banking, even working for a startup, like, that's totally fine. And there's pros and cons to each of those things. Like, investment banking is a lot better at certain things than coming to work at Spectrum. Spectrum, on the other hand, is a lot better at certain things in investment banking. So nothing's perfect. And so don't get dismayed if you don't land your preferred path. There's a lot of ways to kind of find your way back into the industry if it's of interest to you.
Awesome. And I think going into specifically your roles at Spectrum Equity, kind of as a student going into the analyst position and then kind of making your way up and overseeing more of the deals versus being really nitty-gritty within the due diligence, it would be helpful to maybe walk the students in the room kind of through that gradual process.
Yeah, so over time, well, even at the beginning, our best people should have a point of view. So you're not just saying, hey, I looked at the numbers and here it's growing 60% and EBITDA margins are negative 20 or whatever. Like, it's like, great, like, we know that. Like, we're hiring smart people because we want your opinion on what that means and whether this is a good investment. And over time, you're expected to become more and more vocal about that, up into the point when you're a partner, like, not only are you vocal, but you're going to write an equity check of $200 million to support your opinion. And so, again, over time, it's becoming more and more increased in your convictions around what's a good investment and what's a bad investment, and deploying the capital to back up your points of view. And then helping portfolio companies is another big part of it. So as you continue to progress at the firm, you're getting more hands-on with CEOs directly and working with CEOs. And, you know, I probably talk to my CEOs once a week or every other week about various things. And so having the network to help them with various challenges, having the pattern matching and recognition to say, hey, I've seen this before or seen that before, or, you know, hey, I know you're trying to scale TV spend, here's some pitfalls to look out for, all that kind of stuff. You're expected to have built the library of knowledge over the years and the network over the years to be able to help them out.
That's awesome, and I think all of these insights have been super helpful. Kind of transitioning to end here, I'm curious, I know you love to fish, so if you had to bring 3 people on your next fishing trip, who would they be and where would you want to go?
Oh, God. I'd probably bring my dad. You stumped me with this one.
I'm sorry.
My dad, my brother, and probably my wife.
Sounds like a great trip.
Yeah, this is being recorded, right?
Yeah.
Okay, good.
She'll be happy.
That's a good one. I don't know what I'd, like, if I had Michael Jordan or Mahatma Gandhi, like, I don't know what I'd talk to him about when we're fishing. So just the people I know and like, and we probably go to Montana or Wyoming.
That's awesome. Well, Thank you so much for your time. It's been awesome to have you and a great conversation to start the day. So
thanks so much.
Thank you.